Uganda's national debt has risen exponentially in the last decade and is projected to continue rising for some time. Servicing of debt now takes a significant amount of revenue per annum, with most of it spent on paying interests on loans to the international creditors.
We have seen here that the domestic debt is really eating a good portion, 6 trillion in the coming year. That money could have gone to drugs, that money could have gone to paying the teachers, that money could have gone to supporting agricultural farmers, but because of the previous obligation, that has come in as a constraint.
The debt distress is likened to mortgaging of the economy and is hampering the implementation of key government projects of social and economic importance. Whereas some government officials and technocrats claim that the debt level is still sustainable, debt servicing ratios point to elevated risks.
We no longer have the liberty of postponing or of doing other little things. No, we need to concentrate on it. One, of course, is that we need to ensure that we borrow. We run away from commercial loans because those are they are very expensive. They are short term, and I think they take a huge toll on our own national resources. We need to go for non-commercial loans that give us a grace period of 40 years, of 10 years, and a payment period of 40 years, because that's when we can be able to return back. We also need to be smart in terms of what we borrow for and build our capacity to utilize that amount of money.
To curb worrying situation, government has plans of servicing priorities from income sourced from within. We seek for a candid view from Professor Muhumuza, a seasoned economic expert.
Now, we see government taking a decision to say, I will not borrow more. Now, that may be true or not true. It's a good intention, really, if you speak at it from the intention point of view. But the obligation that government already has, which cannot be undone. Now, when you look at them in that space, it's not possible that we are not going to borrow. Because revenue authority is not going to raise the money, and yet the obligations to do are actually already in-house. So it might take a time, maybe another 3-4 years or 5, to see this tempo go down, but it will also take serious decisions to restructure the government. According to a recent report, Uganda's public debt stock increased by 22% from 57 trillion shillings in the 2019-2020 financial year to 70 trillion shillings by the end of 2020-2021 financial year. Dennis Igoa for UB.